Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, so it's a lot to chew on today. We've got trade, we've got the latest with the Fed, and then an onslaught of earnings from the tech sector. I know you broke those last night, so I know you've had a chance to kind of dive deeper into these. So before we get into earnings, let's talk the latest on the trade front. What's your take on this?
Well, I think obviously we did see a little bit of a pause when it came to this trade war between the U.S. and China, at least for now, Diane. And we are actually seeing concessions from both sides. We are seeing the United States cutting the fentanyl tariffs in half from 20% down to 10%, which is now going to bring the overall tariff on China to 47%. And in return, we are seeing China actually opening up and restarting the rare earth exports, and they're going to allow that for at least 1 year. And then there is several different commitments. One is obviously buying some agricultural goods and products from the United States, grains in particular, if you're looking at soybeans and other grains in that space. And then there's also talks around actually buying maybe U.S. energy, especially from Alaska. So at the end of the day, the comments from both sides seems like it's welcoming, but we did not see anything that was really concrete. This is a little bit different than what we saw from Trump 1.0 or in his first term, where we did see a trade deal that was actually inked. It was a non-binding agreement that was actually signed. This time around is not the case. And so you are seeing a little bit of gyration, especially in the agricultural markets, which we're expecting maybe a little bit more of a dollar commitment or a tonnage commitment when it comes to purchases from China, as well as a timeline here, because it's got kind of very key right now with the grain exports. Usually we'd actually see those increase significantly in November, December, as well as January. That's when we start seeing it fall off here. And there has not been any type of confirmation that the Blackwell chipset for NVIDIA is going to be accepted in China. In fact, you actually saw their finance minister before the meeting talk about the fact that they're going to hold off on importing these advanced AI chips from the U.S. here. So the market has been able to shrug that off. We are seeing the markets for the most part flat to a little bit higher if you're looking at the S&P 500. And once again, you're seeing a little bit of volatility when it comes to the agricultural space, but we did not see anything that was negative or anything that was potentially going to blow up this deal, if you will. It seems like they're going back to their own corners, and we'll see how this actually pans out. We have seen these type of reversals in the past as well, where we have a deal and then 3 weeks, 4 weeks later, it starts to escalate again. Hopefully this is not the case this time around.
I love the analogy that you mentioned about going back to their own corners. Feels like a boxing ring there. All right, let's talk the Fed. So, you know, you're seeing a kind of re-rating of expectations, especially as it relates to December. When I look at the CME Fed Watch tool, it's very different today than what it was yesterday before the Fed's latest meeting. What's your takeaway here?
Yeah, a couple of different items. I think it was actually mixed when you're looking at the Fed meeting yesterday, the announcement when it came to the rate cuts. We did receive that 25 basis point rate cut here in the October meeting. But Chairman Powell actually did maybe throw a little bit of cold water on the December rate cut, just stating the fact that, one, lack of information, as well as the fact that when they are in a fog, they may need to slow down when it comes to rate cuts. Now, on the other hand, they are going to end quantitative tightening. That's going to begin on December 1st, and where the roll-off for treasuries as well as MBSs are going to roll into T-bills. So that should actually put a little bit of downward pressure when it comes to short-term rates here. But you are seeing the 10-year kind of re-rate a little bit higher. They probably wanted to hear a little bit more dovish commentary when it came to Chairman Powell's comments, and that just was not the case. But we'll see how the market actually susses this out. I mean, there's a lot that's going to be readjusted and a lot that's going to happen here over the next 6 weeks or so that could push the Fed to cut again. We did see actually two dissents. One dissent was to cut for 50 basis points. Another dissent was actually to hold rates where they are at right now. So you are starting to see a little bit more of a split. And Chairman Powell did talk about this fracturing when it comes to the committee that could turn into some fireworks in the December meeting here. And I think that's probably why you are seeing, obviously, the Treasury markets kind of unravel maybe some of the optimism about rate cuts in December, as well as what's going to happen in 2026.
Okay, let's talk some of the earnings. Alphabet, Google. I was really impressed with that revenue number, but what's your take here? I mean, shares are gaining ground in the pre-market. What's your takeaways overall from its latest quarterly report?
Yeah, they had a phenomenal report, and actually the stock was moving, higher, making new all-time highs into earnings, regardless of what Chairman Powell was actually talking about. And it has advanced another, let's say 8.5%, almost 9% in pre-market trading so far. Revenue came in at $102.35 billion. Street was looking for $101.1 billion. Now, if you're excluding the transaction or the traffic acquisition cost, they were still able to exceed the Street's expectations here. Adjusted earnings per share came in at $2.87. Street was looking for $2.27. The Google Cloud revenue really shocked the Street. That came in at $15.2 billion. That's a 33.5% increase on a year-over-year basis. And you also saw their operating profit when it came to the Google Cloud offering exceeding the Street's expectations. YouTube business looks really good. Search advertising is looking fairly good as well. So you are seeing them actually monetize the AI space here, and they have been driving to try to take a little bit more market share from some of these other players, and then also keep their market share when it comes to search. For now, it looks like that's exactly what they are doing, and they're being rewarded for that. So a really good report for Google all around. No issues when you're even looking at the commentary from their executive team on the conference call.
Okay, well, it looks like, Alphabet, Google being rewarded. On the flip side, Meta shares sliding right now, and it looks like investors have some issues with Meta. What's your take on its quarterly report?
Yeah, this is one of the issues that you have with Meta when they do report their earnings as well as their guidance. Sometimes, Diane, they don't provide a lot of clarity when it comes to their guide, and I think that's what's shocking the Street. We are also seeing, and this is being reported over the last 15 minutes or so, that they are going to be doing a 6-part bond offering as well, a dollar-denominated bond offering. So that's also hitting the stock at this point in time. Revenue actually came in at $51.2 billion. That exceeded the Street's expectations. That's around a 26% increase on a year-over-year basis. The adjusted earnings per share came in at $7.25. She was looking for around $6.61, but they did take a pretty decent charge here, a tax charge or tax hit of $15.9 billion, which also kind of distorted the quarter's performance when you're looking at the fundamentals. The 2025 CapEx spend was raised between $70 billion and $72 billion. Before, they actually had that guidance between $66 billion and $72 billion. But the 2026 outlook, when you're looking at CapEx, is really where the problems arise here. They actually made mention that they're going to see a notable increase, but they did not put a dollar amount to it when it came to their CapEx spend. And so that's where the Street is really trying to wonder, how much are you going to spend? How much is it? And is it going to be a good risk-reward ratio? And that's probably why you are seeing the shares fall here, getting fairly close to that 200-day moving average. It's probably actually trading at that average right now. So I would say a mixed report at best. Uncertainty about the future probably has investors a little bit cautious when it comes to this name this morning.
Okay, all right. Let's talk about your targets on the S&P 500 today. It feels like there are some pluses and some minuses that could hit markets. It'll be interesting to see which direction investors take it. So what's your target on the S&P 500 to the upside and downside today?
Yeah, to the upside, 69.40. To the downside, 68.50. I mean, we've been able to brush off a lot of this news that could be seen as negative here. So some buyers are stepping in, at least for now. A light day when you're looking at the economic calendar. We have the VIX with a 15 handle so far. So this is going in the right direction of the bulls, at least for now. And hopefully we are able to hold this up and see market breadth expanding here over the next couple of hours.
Okay, and plus we're heading towards November. I'm excited about that because the holiday is coming up. All right, thank you, KG. That's our Kevin Green, Senior Markets Correspondent.